there been a big up opening, I would have said, oh, darn, that's going to bring in sellers, people who bought in the last half hour. Instead, we've got a continuation of the NASDAQ going down. That's terrific because eventually the sellers exhaust themselves. Obviously, people tomorrow are very concerned about a too hot number. But when everyone's concerned about a too hot number, then it becomes less of an issue. So I think, Carl, it is time to look. It is time to think about the ones that have just come down a great deal. I put some I do that memo every morning about what I'm looking at that goes to club members. I'm seeing a lot of stocks that have been now cut in half. I mean, not down by 5%. I don't cut in half. And we're getting a lot of price target decline cuts because stocks have come down a lot. That, again, is sign of bottoming, not topping. So I'm looking.
So, I mean, the Fed minutes have been pretty well chewed over at this point. But if they're serious about quantitative tightening later in the year, how do these year-end S&P targets survive?
That'll be hard because it does have a 2018 feel if they do that. I was working with Larry Williams, who's been, I think, the great market historian of this era. And he just said, look, you're still going to get a bounce. You'll tend to get a bounce just because we're going to be overdone on the downside. I mean, look, maybe Powell accomplished what he wanted. Now, it's just minutes, remember. It's not actions. If Omicron really shuts down the economy, now I want to choose my words here. I don't think it slows the economy. Is a better way to put it.
Sure, activity takes a hit.
Activity takes a hit. Then I do think that there'll be people who are saying, oh, geez, I hope they don't go too hard because we've now lost the stimulus, the child care credit that's going to go away in the 15th of the month. You're not going to get it. A lot of the retail downgrades and cuts come from the prospect that that's going to go away. So I don't know. I mean, I'm more sanguine than I was going into the year.
Yeah, we'll get to some of the calls. Target downgraded today over at Wells. Do you think earnings come to the rescue in any way in the next couple of weeks? Because we got a few today.
Okay, it's a good example. Now, we really have to watch Conagra, Bed Bath & Beyond, and Constellation, all three which are guests tonight on Mad Money. And why we have to watch them is because they are, for the most part, in each case, representative of crazy things. Bed Bath is a meme stock, okay? Look, Mark Tritton, who's the chief executive officer, he ain't no memester. And then you got Conagra, which is a kind of like, well, wait a second, let's hide in the defensives. And then you have Constellation, which is high multiple. So I think these are going to tell the tale. Let's watch them closely all day. By the way, you don't come on idly tonight. Now, some of these guys have never faded. But when Bed Bath really hit a speed bump, Tritton said, I want to come on. The cadence of the months, which is what matters for retailer, was very good.
Yeah. Bed Bath has been a bit of a puzzle so far this morning.
An enigma.
Because gross margins were okay, but their Q4 outlook was a little soft, but it came well off the early morning lows.
Well, I mean, the lows were yesterday there was another drop down. I was surprised. I do think balance sheet's real good. I question how much Bye Baby is worth versus the whole market cap. So I don't want to write this one off. Tritton, let's say compare Tritton to Ryan Cohen, the so-called savior of GameStop. One guy's been around forever. It's a great merchant, which is Tritton. We still find that other than the emoji of the ice cream cone, we're waiting for the game plan. I don't think it's to become good humor.
We're still talking about it almost a year later.
Well, this.